What's going on in the mortgage industry this week that might be affecting people in Niceville, or what are you seeing? What's on your heart?
Yeah, man. So this week is really not a whole lot different than a lot of the weeks lately. It's just the affordability, right? Home prices have gone up quite a bit, and interest rates are high. Property taxes are commensurate with property value, so they've gone up. Insurance is commensurate. It costs more to insure a $500,000 home than it does a $300,000 home. And so you have insurance gone up, but then also insurance has just gone up. And that doesn't matter if it's your home or your auto, it's just expensive. So everything's expensive right now. But what the reality of that is, because it's expensive, there's not a lot of buyers out there. And so what ends up happening is you have sellers who become highly motivated to sell their property. And so that's a lot of the conversations I'm having with realtors this week, in the recent weeks, is that they just need activity. They need buyers to start a conversation with them about buying their property. And what that tells me is that even though all the things I just said about how homes are not that affordable, or there's an affordability kind of issue that's prevalent, people can get some good deals on homes right now if they're structuring things correctly. Gone are the days where you have to pay over the asking price on a home, or you have to pay all of your own closing costs and things of that nature, or God forbid you ask for a roof to be replaced. Those days are gone. And so you find a home that you like, I'm encouraging people, make the offer that makes sense for you. Start the conversation, get the seller to pay all of your closing costs. That could be eight, 12, $15,000 potentially that a seller will pay for you right now. And then you add that to not having to pay over the asking price on a home, and you're coming out of pocket significantly less to get into a home today than what you would have a couple of years ago. And the reality is the real estate market, long term, it always goes up. And so even though things feel expensive now, they're going to be more expensive in 5 years. So if you can get in now and then let the insurance thing settle down so that your insurance comes down, rates settle down, you refinance, you're able to get into homes right now, a lot easier than you were able to a year, 2 years ago.
So I feel like John
That's a long
Solomon is
answer.
no, that's great. I feel like John Solomon is like the silent partner in like half of the conversations I have at this point.
Yeah.
Because he talks a lot about how people are making, or he's encouraging people to make like lower offers that, like you said, make sense to the buyer. Is that something you're seeing on the mortgage end of things, where housing, mortgage deals, or the stuff you're putting together on the mortgage side of things, are coming in at like lower than numbers that have, 2 years ago where they were sky high? Or how's that looking on your side?
Well, what it looks like from my side is that people actually have some time to make decisions. They're able to go look at a home. They're able to get an insurance quote. They're able to talk to us about different ways to strategically finance that home, different down payment options. And so before, they didn't have that opportunity. You had to know that you wanted to buy the home, and you need to be ready to write a check right now and just basically deal with the terms, whatever you could get. Now they don't. Now people don't have to do that. And so, while again it's expensive, they are able to at least make educated offers on properties, and to be able to do so with financing that they're comfortable with, at least for the near future, until maybe they can, like I said, refinance and get that interest rate down, or whatever they need to do down the road.
For the numbers nerds that are tuning in for us, what are the interest rates looking like right now, and are they trending up or down, and what does that look like kind of over the last month?
Yeah, so over the last month, they've been going up. Unfortunately, we had a nice little dip, but a lot of times the Fed takes action and the markets react opposite to what the Fed has done. And that's basically because the market builds that change in before the Fed actually makes their adjustment. So we've been seeing rates go back up, and I'd say we're probably about a 0.5% higher right now than we were 4 weeks ago. And so a typical VA interest rate right now for our former and current military, without paying a bunch of money, you're going to be in the mid sixes probably. And a conventional, which would be your traditional non-VA, the next most prevalent loan type that we have in our market here locally is a conventional loan. So that requires a down payment, and that you're looking in around 7%. And depending on qualifying factors, some of those rates could be a little bit lower, some of them could be a little bit higher. If you're well qualified, you're going to be on the lower end. If you're not as well qualified, you're going to be on the higher end. But But that's where we're at, and it unfortunately it looks a little unstable moving forward. The presidential election is becoming, as we all can understand, um, front and center. And so, no matter who wins, it's going to cause chaos from the other side. And chaos is never good for stability in the market. So, it's going to take a little while for things to settle down and us to really know what the path forward looks like. Um, that said, the Federal Reserve is still hanging tight to likely lowering rates by about a quarter of a percent before the end of the year, and then projecting multiple decreases going into 2025. But we'll see.
So, final thing, I feel like there's got to be a game in everything that I do. But right now, are you happier if you're a buyer or a seller?
Ooh, man, good question. I think there's activity to be had out there. So if you're a seller who is reasonable about the value of your home and is working with a qualified, experienced, knowledgeable realtor who will be honest with you about what it takes to sell your home. So basically, if you have realistic expectations, I think a seller would be happy because you're still most likely in a position where you're making some money off the sale of your home. If you bought it in the last couple of years, it's gonna be tough to make some money. But if you bought it 4 or 5 years ago, you're still in a position to make money. Um, Buyers also, if they can grasp the understanding that sellers are becoming more and more in a position to have to negotiate, and you can, as a buyer, overcome kind of the immediate cost right now of the interest rates and insurance and whatnot. You can get some deals out there. I think people you got to just it's all mindset, right? Um, for both sides. So I don't know. I think you can be happy in either side of things right now. It's more of a balanced market right now than what we've seen in a long
I'm gonna put you down as a slight lean sell.
time.
I'm gonna just track that over time. Anyway, Scott,
Okay.
thanks so much, brother, and we'll see you again next week.
Sounds good, Christopher. Appreciate you, man.